Thank you so much to our sound engineers and to all of you for being patient with us as we kick off our next conversation, ladies and gentlemen. Just before we did take a break for lunch, many of you might have heard the insight that we heard regarding the retail sector and developments that we see in markets such as Angola, as well as the DRC. This time, we come a little bit closer to the South African borders and looking at markets in Botswana, Zambia, as well as Zimbabwe. Of course, we will draw some reference to what we see across the continent too, given that a lot of the developers and investors here on the podium do have exposure as well to other markets across the African continent. A reminder, this is an incredibly interactive session, so if there are any questions at any time, please do feel free to raise your hand and interact with us and pose your questions to the panelists. Let me introduce them though, many of whom must be familiar faces to you here in the audience. And okay, that's the wrong slide, because none of the faces match the names or the titles there, but they are welcome to come and join us if they are keen to. Would you like to introduce yourself? No, I've got my notes, don't worry. That's why we still use paper and technology, just in case somewhere there's a bit of a failure that comes through. But introducing our panelists that are joining us today, ladies and gentlemen, we do have Louis Maynard from Actus Africa, followed by Heidi Rix from Mara Delta, Joe Simpson, who's, Mara Delta is now Grit. How can I forget when that's part of my job in the media industry? But you're quite right, formerly known as Mara Delta, formerly known before that as Delta Africa. So quite a few changes that have gone through there, but now known as Grit. And of course, Joe Simpson, your company name hasn't changed, Primetime? Still Primetime. And Chipo Shabangana, who's Deputy Principal Officer for Finance and IT at the National Railways of Zimbabwe Contributory Pension Fund. Fantastic. Well, each of you have your microphones, and we're going to get into the conversation, certainly taking a look at the environment regarding retail development in Mozambique, Zambia, and Botswana, where there's obviously been quite a lot of interest, a significant amount of investment. And if many of you might recall, we did have a retail presentation just yesterday, which actually brought up the question regarding oversupply. And I was warned just before we started this panel discussion, I'm speaking to developers and investors here, so oversupply is a swear word, but I'll ask it anyway. Is there an oversupply in the particular 3 regions that we're discussing today when it comes to the retail segment, despite the level of success that we've seen? I'm going to pass it to you, Heidi.
Thanks very much.
It's on. The microphones are on, so feel free to grab and talk.
Thanks very much. I think from a Zambia perspective, certainly from our investment platform, when we looked at the figures earlier that Vic has put on the board, looked at the square meterage of formalized retail, Zambia... If you could just
hold the mic slightly closer, just to make sure that you're completely audible.
Right, can everyone hear me now? Okay. Good, so I think from a Zambia perspective, it certainly has had formalized retail for a lot longer than some of the other countries that have been discussed today. I think the figures that I have is 330,000 square meters of retail in Zambia, 22 shopping centers. So that is substantial, but one forgets that within the African environment, it's a privilege to have a car. And I think a lot of our consumers and the catchment markets that we serve are reliant on public transport. And the cost of public transport, especially with disposable income and the levels that we service, can be very preclusive in terms of the environments that people shop in. So I think, yes, whilst there might be 22 malls in Zambia, I think there is still room for further development in certain areas, perhaps not within Lusaka itself. I think Lusaka itself has got a very wide and varied supply of retail, but certainly the perimeter areas, the sort of rural areas within Zambia, there is more room for development, more room for investment, and certainly the investment platform we've seen in Zambia has been a very good investment platform and one that we would continue to investigate and invest further into.
Is that also referring to the Copper Belt specifically?
Copper Belt has been very good to us. It's had its good and bad times, but certainly I think the 2 shopping centers we have Mugabe Mall in Kitwe, we have Kafubu in Dola. Whilst we've seen ups and downs, they've been very resilient. They don't just service the expat communities that work within the mining industry, but service local communities. It was mentioned earlier as well, I think somebody from Cushman mentioned that there's a lot of cross-border traffic. So Mugabe itself is 30 kilometers from the DRC border, and we see a substantial amount of traffic coming across border. And again, I think if Mugabe is a closer shopping environment to something that might be put together in DRC, we've heard earlier, lots of plans for the DRC, we'll still see people coming to Mugabe because of what we offer the extent that we offer. It's a 28,000 square meter mall. It's a community center. And I think it offers a great shopping platform at affordable cost for people to come and shop, do their shopping and go back.
I want to stick with you a little bit further because you mentioned the ups and downs, and I certainly want to unpack some of the lessons that you've learned in the downs. Many of us are aware of some of the economic pressures that have been felt given the copper price and the macroeconomic environment within Zambia, political uncertainty as well. Talk us through how that's impacted some of your tenants with regard to foot traffic coming into those malls, and of course, what that means for you and your occupiers through your leases. What lessons and outcomes actually have come out from that experience?
Well, I think let me start by saying you've heard Bronwyn repeatedly say, anybody who's heard her speaks about counterparty. So even within our retail environments, we've got strong counterparties within our retail centers. I think our estimates are, we've got about 70%, if not more, South African retailers within our 3 shopping centers in Zambia. The South African retailers have been well placed, they're brands that are well recognized, they resonate with the Zambian consumer, and we've actually found that they are able to tolerate sort of dips up and down. Yes, it's tough. Everybody speaks about it. It's not easy. You need to have resilience. You need to have grit. You need to...
We see what you did there.
So I think, and certainly the partners that we have within our office sectors, retail sectors, they do have knowledge of their industries. They are able to plan accordingly. No one is always expecting a boom. And I think certainly the partnerships we see, they are able to sustain those ups and downs. And we do have requests from our retailers from time to time where they're experiencing a bit of difficulty, some cash flow issues. But again, we'd rather work with retailers who come to us and say, look, we've got a little bit of a tough time at the moment, but we're in this for the long haul. We're a long-term partner. You know, we give a bit of relief. We get longer-term leases. We have longer-term sustainable tenancies. And for us, it's a business partnership. So I think somebody once said to me, if you don't create your reality will create you. And I think one has to face the realities of doing business in Africa. You've got to rely on relationships, you've got to rely on partnerships, you've got to rely on alliances. You can't do it on your own. And to have respect for each other's businesses and work towards a long-term sustainability is critical in the business that we have.
Thanks for that overview of the dynamics that we certainly see coming out of Zambia. Joe, I do want to come to you just to get your insight with regard to your experience being based in Lusaka specifically and not having a lot of exposure to markets like the Copper Belt. But what has your experience been with regard to the market specifically in Lusaka? And if we can also link that to Botswana before we come to Louis.
Okay. On the oversupply issue, I think there probably is an oversupply, but only in certain sectors of the market. The space that we're in is the smaller convenience centres, and we're not seeing that at all. We actually have a waiting list for the mall that we acquired back in January this year. And on that smaller convenience type stuff, we're totally tenant driven. So we don't see that problem. We're having to adapt perhaps and do smaller units because that's what the tenants are demanding. Tenants who previously wanted 300 square meters are now coming to us and saying they want 180
Any particular
or 200.
reason why they're looking to move into smaller units?
That's a question for the retailers, I suppose, but from our perspective, it's just we're seeing it in reduced size and requirements. But we're then adapting our product to suit that. We're seeing that there is opportunity still in Lusaka. It's in pockets, and it's more of that convenience stuff. Anything from maybe 3,000 to 7,000 square meters is where we are. But also, there's opportunities elsewhere in the country. We're developing a centre in Chirundu, which is on the Zimbabwe border, a small centre of under 5,000 square meters, which has come with ShopRite as an anchor and Hungry Lion, and it's already 65% let, and we would expect it to be 100% let by the time it's delivered to the market early next year. So whilst there is an oversupply probably in the big boxes, in that convenience stuff, we've got the tenant demand to
I want to get in there and piggyback off of a comment that was made in an earlier session by one of the property lawyers. I'm not too sure if she's in the room, but she's from Zambia. There you are. How could I miss you? And you mentioned that there's a lot of convenience kiosks along the road within Zambia. So I'm thinking, if you mention more convenience stores opening up, Could we see that transition taking place where this does provide an opportunity, instead of you having to stop on the side of the road and you get, credit or airtime for your phone, you actually make your way to something similar like the filling station or the convenience stores that might be established? Or are we actually talking about two different markets here?
I think there's still going to be a market for those guys on the side of the road, but we would obviously hope that most people will come into the nice new convenience centres, and there's a certain demographic that would much prefer to go into those kind of places. And it's the banks, it's that kind of stuff that's in there, those services that are provided, and a quick in and out.
What about Botswana? What are you seeing there? There was an earlier conversation yesterday with regard to the market dynamics there, and one of the representatives from Botswana had actually said to me, it's a bit disappointing that we had a room of about 20 people. What's the appetite been with regard to the exposure in that particular market?
In terms of the exposure from...
For you, prime time specifically.
We do have a substantial amount of retail in Botswana. And the supply issue, it's perpetual. I was looking on the internet this morning for some old commentary on Botswana. And I found...
Did you find any?
Yeah, something I'd written myself, which was in 2003, and I can quote it because I wrote it down. And in 2003, I wrote, until recently, the fragmented nature of Gaborone's retail facilities meant there was unquestionable demand for a regional shopping centre. However, the construction of 5 shopping centres, Riverwalk, Game City, Malapo Crossing, Westgate and Fairgrounds Mall, is likely to prove excessive for a small city. And we have more than doubled that since then. And, okay, some of those haven't quite worked out, but the best centres are all 100% full. Our shopping centre, our main shopping centre in Gabs, is a similar facility to the one at Kabalonga in Lusaka, and again we have a waiting list of tenants for that one. I think maybe the exposure you're referring to comes from a centre that we developed and delivered last September, where we had to open with substantial vacancies due to a licensing issue, not due to a lack of tenant demand. We would have opened 95% full, but unfortunately there was a standoff between the government and retailers, and we were unable to open some of the South African shops at that time, and it's taken a year for them to start coming through. So yeah, but the tenant demand is actually there. It's just the problems that we've had getting that centre open.
Let's come to you to get your analogy and perspective as well regarding your experience through Actus in Botswana specifically. I think, Joe, we're not blaming you for making the wrong call or adding the wrong commentary in 2003. It actually worked in your favor in the long term as a developer that, again, responding to that oversupply question. Louis?
So Actus doesn't actually have any investments in Botswana directly. I'm very familiar with the market, having worked with the logistics company that supplied many of the retailers there, growing up in the market itself and being associated with one of the listed funds. But I think, to pick up on Joe's point, it's the good retail centers that have continued to perform. And I think that's very important in the Zambia context, where Actus has been invested before. So way back when we developed Mandla Hills, which is a center I think anyone who's been involved in Zambia is very familiar with. One of our guys liked it so much he left Actus, raised some money and bought it back from the guys that we sold it to. So those centers have continued to perform, but from our point of view, in a market like Botswana or Zambia, the opportunity for A-grade prime retail is certainly shrunk at this point. We've sort of evolved our retail strategy, therefore, in those markets to focus more on the industrial side of things, where you're then supporting the likes of Pick n Pay, Massmart, in terms of their growing operations in that market. But that's just the strategy that we've adopted. We're unable to do what sort of Joe and Heidi here are able in terms of the convenience centers. I know you guys are doing some work with Choppies as well in
Not
Zambia.
specifically.
Not specifically. Okay.
We do have a project in the pipeline. Yeah.
Okay, and then I know that some of the contractors in Zambia are still building shopping centers, so someone is seeing the opportunity there, but it's not in the fundamentals around property aren't as conducive in those markets as they used to be. which is a stark contrast to the earlier session where, the Bahia Mall that we are taking to market soon, well, at least opening soon, is the best location in the country. And that's been done in Mozambique, and it's been done in Botswana.
I'm tempted to venture into opening up the floor for questions as well. Maybe we should, just to ensure that we get as much interaction as possible. To those who are standing, please feel free to grab a seat anywhere. We are more than happy for you to make your way across the room and get comfortable for this session. But on the dynamics that you've certainly mentioned, again, robust investment, still great opportunities, but the question around sustainability as we wrap up regarding Zambia specifically. Is it sustainable? And I'm sure the answer will have to be yes, given your exposure to those particular markets. But does it mean, in order for this to be sustainable, as you say, some of the bigger markets or shopping centers have performed incredibly well, the move to convenience, who will be the winner in the long term here? Or is there space for all?
I think certainly from we've seen our malls in Zambia perform really well. We also have a very strong local partner. Harriet are our partners in Zambia. And I think it's important that one understands the market. You can't do your research once, think you know everything about the market. That research has to be ongoing. You need to understand the challenges, the opportunities to ensure that sustainability. You need to understand not just the property fundamentals, but the various aspects that can affect your retail, affect your investment, affect the businesses of your tenants. So I think there's a responsibility on investors, developers, retailers combined to consistently research and consistently keep up to date with what those individual markets are requiring. A friend of mine said to me, he was going into Africa, and he said he's worried about going to a country where he might be chased by a dog and the dog doesn't understand what footsack means. So I think it's the same principle. You need to understand your market. You need to respect the fact that it's not a cut and paste. And I think as long as the retailers understand that, as long as investors and developers understand that, and we can consistently up our game, we're seeing the middle market within Africa becoming increasingly aspirational. We're seeing more and more exposure to international brands, more and more call for international brands. We're seeing the Turkish retailers, Portuguese retailers, Spanish retailers starting to look at the African platform extensively. We're starting to see them moving across. You've got French retailers, not just Carrefour on the supermarket side, but someone like Decathlon opening 2,000 square meter footprints and venturing into new markets. So I think we need to provide the environment within which retailers can grow, and retailers can actually increase their footprint across Africa, provide these products and services to the African market. And we need to make sure that we keep up to date and we almost lead what's required to introduce global retail and do so sustainably. So I think we welcome Spanish retailers, we welcome the Portuguese retailers. You heard Vikas mention the Sinai Group is aggressively growing. So I think certainly it can be sustainable, but you've got to keep your homework up to date. You've got to make sure that the partnerships work together and that you share information. The lack of transparency of information in Africa is a big concern. And I think the more retailers, investors, and developers share that information, the more we'll understand those markets and the more sustainable future developments and investments will be.
Very right, and I do want us to delve into that retail conversation in just a moment, but I also am aware that none of you have exposure to the Zimbabwean market, if I'm not mistaken, and Chipo, that means I've kept you quiet for way too long. But give us a sense of Zimbabwe, again, very close ties and relationship, not only with Sadc peers, but of course the other countries in sub-Saharan Africa. What's unfolding in the Zimbabwean retail space? And I understand there was a recent opening as well of Borrowdale. Unpack that for us and hopefully encourage some of the investors in the room and developers to actually look to Zimbabwe for some growth opportunities there too.
Thank you. Maybe just to give background, we can't really say the retail market is saturated in Zimbabwe as we speak. I know for one, retail shops within the CBD are vacant almost at this time. Why? Because there's congestion. So we've seen general exit of retailers to the suburban malls and neighborhood centers. That's the shift, and in fact there is a demand for same. I know from the understanding we all have that there are economic hardships in Zimbabwe. Would expect such a sector like the retail sector to collapse, if anything. I'm sure you're aware of the liquidity crunch, the Well, the underperformance of the economy generally has translated to reduced demand for consumption, really. You're looking at a reduced pocket from the consumers, and even the shopping basket has reduced drastically. But contrary to all this, the retail sector has actually come up or outperformed, come up with a different approach completely. Whilst we would have expected things to have faltered, surprisingly, what has unfolded is a competition that's coming up between the main retailers as regards refurbishment of the shops and expansion as well. There is a market, or there are opportunities as we speak. We are looking at a consumption-driven economy. So whilst the general populace may struggle, the focus has been to maybe feed on basic groceries and food. So the food retailers and groceries have been able to thrive, and there's still room for same. We've also seen a general development of residential space as we speak. I'm sure you're aware of the housing backlog in Zimbabwe. So institutional investors, private investors have come up through to develop residential space, etc. Now, the focus has been to simply create the infrastructure required for the construction of the homes. So simply set up the water system, the road network, and let the consumers do their own construction. So in the process of saying this, why I'm saying this is that we're looking at development of a lot of housing communities without the retail shops and etc. There's opportunity now for retailers to then go into the market. Because here's a case where people actually travel to go and buy from one or two shops that are operating wherever it is. But if we can have retailers coming into the market where the people are, there's still opportunity. And they have been surviving anyhow, in spite of all these challenges, surprisingly. We've got the liquidity crunch where cash was not available. It's for the few banked ones who have been managing to use plastic money, which was also in short supply at the beginning, but it's catching up. I think there's some significant improvement as regards use of plastic money. Mobile banking has become of great use as regards the rest of the population, including those in the rural areas. We're looking at over 70% of the population being in the rural areas, and that population would do well with, and which is what they use, mobile banking to do the groceries and etc. So as regards retail space, especially for food retailers, there's still room.
So there's still room, lots of opportunity, but I'm sure this is a tough sell. In my mind, I'm thinking, as you mentioned, liquidity crisis, consumers under pressure, again, exchange controls that are affecting the dynamics, and of course, getting the goods and services to that particular market. And I'm tempted to make a bad joke, but I think I won't with regard to extension cords. But anyway, on that note, are there any individuals in the room here who actually do have exposure to the Zimbabwean markets that we can actually unpack and distill some of the challenges that are in that market, and how someone like Chipo, I'm giving you a very tough task here, but to actually sell and encourage the developers in the room to look to Zimbabwe for growth opportunities? Number one, anyone in the room with exposure to that market? One person, two people. Maybe with three people. Okay, let's get a few roving mics to you just to understand what's keeping you there, what's keeping you attracted to that market, and how that ties in as to what Chipo is saying with regard to some of the investment potential that's there and incentives, hopefully, that might be provided in order to ensure that we see an increased drive for capital. I see our fellow panelists on stage very shy to talk about Zimbabwe, but we'll get there too. Anyone keen to share your thoughts with us? Thanks, Brett.
Brett Abramser from Terrace, Africa. We recently completed a center in Borrowdale in Harare. It is 8,000 square meters. It has the largest pick and pay in Zim, also one of Pick and Pay's largest trading or best performing centers and stores in the whole of Africa. Zim is tough. Let's just not fool ourselves compared to our other markets where we are trading. You cannot get your money out. It's, that is number one, I guess the number one problem is that any investor in a market needs to pay back the bank or their shareholders. And I think the number one problem with Zim is that you might have a great asset, but it's very hard to externalize the funds that you are creating from your tenants. They all pay you, you got US dollars in your bank account, but that is a challenge. However, as we say that, I think there are opportunities, and I think over the next 2 to 3 years, when things stabilize, or hopefully stabilize, I think there will be opportunities that will present themselves, but it is tough, and I think we are going to see let's call it an undersupply of retail in the market until we do see a stabilization.
Thank you so much, Brett, for your feedback. Chipo, let's continue with you in just understanding the dynamics. You are a representative of the pension fund as well. Just how much exposure do you have to the retail space in Zimbabwe? And of course, you know, for developers in the room, and as Brett mentions, hopefully the tide will turn and opportunities will open up. How best do they need to prepare themselves with regard to their strategy in unlocking those opportunities in Zim?
Maybe I'll start off by responding to that comment. Indeed, the difficulties of repatriating, it was actually, and it still remains a deterrent for foreign investors. But I'll tell you from the last monetary policy statement just a month ago, in fact, this is beginning of this month, the 2nd of August, the central bank has taken a stance now to prioritize foreign investors, because indeed we need to attract that foreign investment into the country. So they have been taken as the first level preference as regards repatriation. We know our coffers are quite constrained as regards foreign currency, but they take preference when it comes to repatriation. So when dividends need to be paid out, if you apply for same, you get first preference. And now as regards our own pension fund, I'm coming from a pension fund, we are just about $400 million in size. This is the railway pension fund. And we're looking at a property portfolio of about 220 million in terms of property.
Dollars.
US dollars, yes. Quite unusual for a pension fund, but we're a mature fund. And that obviously places us in a very unfavorable situation, because we must be liquidating now to be able to pay our pension benefits. However, as regards that investment, it served us very well. You recall we went through the hyperinflationary period. We're one of the few pension funds who carried on or managed to continue paying the benefit payments soon after the inflation, after that hyperinflationary period, because we had property. Everyone else who was we had the money in the bank account or on the stock equity, we all started at nil. So that was for everybody. But for those with fixed property, you could then take off, because we have your tenants inside and they'll pay the rentals. And we welcome the US dollar era that came through in 2009, that brought in the multi-currency use of the US dollar, the rand, and a few other currencies. That has sort of assisted in the process. Maybe to comment as regards the performance of the property segment in total, the main challenge has been on rental collections. Remember, the performance of property is not the brick and mortar, is the tenant who is operating inside. And the performance of the tenant is really a function of the economy. So if businesses are folding and etc., it does translate to rent arrears and etc. So we expect our estate agents, I'm saying estate agents because we use a model where our assets are managed through asset managers and estate agents. They would need to then strategize and come up with ways of managing growth of arrears and to ensure they do collect. There's need to rationalize space for these retailers. I know we may be used to the big spaces as we see elsewhere, but when you're operating in a very challenging environment, you may as well rationalize to the space that you can afford to pay for, and that is aligned to the business you're generating in terms of output. So we've had engagements with tenants broadly to rationalize. I know there's some preference to be seen to be holding a big shop, etc. But I think we must trend towards closer packaging of whatever we're selling and making sure we're optimizing on the returns. And the same retail tenants, as they're operating, they must also consider the expense base. If you're going to be running around with a big flow of a big workforce, etc., and if you're just not going to be monitoring your expenses, yes, you're going to eat into your profits and it will become challenging. Yeah. So in view of the softening revenues, there's also need to actively look at the expenses. Those are the few areas you can indulge in.
Exactly. Exactly. You mentioned something so critical in your response as well, which is the performance of your tenant inside these retail centers. And what we've seen as a common theme across investments across the African continent is that South African property developers go in with a lot of South African retailers. And that makes sense because there is an understanding, a relationship, and of course you can coordinate the dynamics there. But one particular issue that has always been addressed is this perhaps saturation of South African brands within in South African retail stores across the continent. How do we strike that balance with regard to, number one, is it true? Number two, how do we try to cultivate interest in other international brands coming into the market, which address the needs of local demand? And of course, cultivating the culture as well of interest of Zambians purchasing their own Zambian brands in-house and ensuring that those tenants, though, are also best positioned to perform well in the developments that you own. A very packed question, I know, but I'm hoping that we can open it up to the panel as a whole as well as to audience members too. Let's start with you, Louis.
So in the Botswana context, I think there are a number of local champions in that market already. So there are a lot of Botswana-based retailers. And those retailers have expanded into the neighboring countries. So I think in Botswana, you don't just have this copy and paste of South African retail. There've actually been
But do you still have a lot of South African retail stores being the anchors there?
Being the anchors, you do, but we have the likes of Choppies. I mean, Choppies is a Botswana-based company that's grown out of Botswana. It is a very aggressive expansion.
I'm going to challenge you on that one and say Choppies is but one brand that we've often alluded to in platforms like this versus ShopRite, Pick n Pay, Mr. Price, Woolies. How many more South African brands can we count?
Sure.
In contrast to, the other brands.
Look, you're absolutely right. So there are a lot of South African brands. So that's not so much the point. The point was more that in Botswana you do have at least some of these local champions. And I think regulation in Botswana became quite difficult for the guys who were invested there around how many South African brands there were. So the government started putting the brakes on that. It's since been sorted out. But in Zambia, it is quite noticeable the number of South African operators there specifically. I mean, sorry to go back to Mozambique, but I was on the panel earlier.
No problem.
We've done a lot of work in minimizing the number of South African brands because that market is not geared towards, I think the Mr. Price guy was saying, they like more Brazilian stuff, they like more European stuff. And that we definitely found, and we've built a shopping center and a tenant mix which caters to that. Once those tenants come in, we think, will expansion happen? Yes, certainly in Angola. The rest of Africa, a little bit more time. But certainly the Zambians, the Zimbabweans, and the Botswana are more used to shopping at the South African guys. So as long as the tenant is performing, I think you're okay, because that's what we're speaking about. The value in a shopping center is driven by the performance of the tenants. And if those guys, from a food lovers perspective, I mean, one of our sister funds owns a stake in Food Lovers Market. They've had a mixed results. In Zambia, they've had very strong franchise operators who have completely outperformed. So is that a South African brand with support? Yes, but it is actually local operators. In Botswana, Joe knows more about this than I do, Food Lovers took a hiding, and they've since pulled out the market. So I think it really depends on the strength of the local partners in those markets, just as much as the brand.
Joe, feel free to elaborate.
The Food Lovers are actually back in now, but they did take a hiding and had to depart.
If you could hold the mic slightly closer, apologies.
Sorry?
The audio levels are slightly low.
Is that all right? So just something, as Louis said, Botswana's domestic retail market, our homegrown stuff is actually pretty reasonable. It's fairly strong, and it can compete with a number of the South African brands without too many problems. But something that we've noticed from them as we were going through this licensing issue is our domestic retailers want to have the South African brands in as well. It generates the footfall, it brings people into the centre. And those small guys, aside from the bigger domestic brands, your pharmacist, optician, whatever, they need to have clicks come into your mall, or they need Jet or whoever to come in and bring the numbers. So I think generally it's welcomed. It's far less developed in Zambia, it would seem to me. We don't have within our malls much beyond the small shops that are homegrown.
Heidi, to come to you, just to get your feedback. You did allude to the aspirational market that we see across the African continent, and that also speaks to not only South African brands, but more international brands coming into the market, and you alluded to some Turkish brands too showing interest.
I think firstly I'd just like to mention as well that I think at a time where retail was absent on the continent and retail needed to be provided to people who didn't have that exposure to retail or the ability to do their shopping close to home, it was the South African brands that took a punt on Africa long before anybody else did. So I think one mustn't forget that, and I think certainly we're now starting to see a number of the global brands who've seen the South African brands do really well, and we've also got brands like the Turkish brands who certainly have incentives and financial incentives to expand across the continent. I think that's also something that perhaps governments can take note of. The Turkish government has been very active in partnering with its Turkish brands. They offer them not only incentives in country, but also have engaged with import-export negotiations with countries across Africa to offer them the opportunity of bringing in these brands at price points of quality goods and price points that are exceptionally competitive and that are going to start competing head-on with a number of the big brands that are already in these countries. I think it's healthy. I think we've got, as I said, aspirational markets or aspirational consumers, and we need to keep providing what these consumers are looking for if we're going to be sustainable. We need to provide platforms for global retailers as well as South African retailers to grow on the continent. So I think, I think hats off to the South African retailers who did take a punt, but I think everybody's going to have to sharpen their pencil. Certainly global retailers are looking at Africa with different eyes. And I think we're going to see a couple of big changes on our tenancy mixes going forward.
Interesting you mention that, because we've seen that also impacting on more mature markets like South Africa, where Cotton On and H&M have really been eating into some of the market share here. We're opening up for questions now on a variety of issues. We do have a hand here in the front, if the mic would make its way there, and a few others in the back too. So we'll probably be passing around. Yes, please.
Hi, Vickers from Brawl. Ari, you mentioned earlier on the amount of square meterage of retail space in the market. If you compare that to 3 years ago, has there been any pressure on rental levels? One, and two, is there any issues on US dollar leases?
The same question comes up time and time again on US dollar leases. So I think certainly Louis made the comment as well on the previous panel. You know, the US dollar leases are a prerequisite. We get our funding in gearing. We get our funding in dollars. We build in dollars. We pay the construction teams in dollars. So, you know, until such time as we have the opportunities of local funding and that whole funding environment and platform changes, there are very few financiers who are prepared to take funding in dollars and sort of your lease streams in a local currency. So there's a lot that needs to change in that framework before we can move away from dollar-based leases. We are seeing a shift where we do have a smaller portion of local currency leases. So I think our statistics in our Zambian portfolio are we have primarily, I'd say, about 90% dollar-based leases. But in terms of payments in dollars, we have close to 70% paid in dollars, 30% in local kwacha. So I think that certainly will remain for the foreseeable future. Pressure on rentals as you get economic upturns and downturns. Yes, you do get the pressures on the rentals. And that's not necessarily just from demand, but also from political unrest, from issues that give people all those risk mitigate or risk factors that come to the fore. The retailers, funders, the retailers, investors, everybody starts getting a little bit nervous when things happen. At the end of the day, the African platform is dynamic. You need to roll with the punches. You've got to have that resilience. You've got to have that long-term view. And we will see pressures on rentals. You'll see rentals growing. You'll see rentals sort of ebbing out. You'll see rentals declining slightly. But certainly, we haven't seen major shifts in rentals. Our average rental basis, maybe we've seen a 10 to 15% variance, swings up and downs, but there is still growth. We still see lease escalations coming into leases. Our retailers are paying them. So I think there's certainly still growth. There's capital growth in these assets, and I think we still see great opportunity on the platform.
Fantastic. Any other questions from the floor? There's a hand on that end there. There was a hand that I saw on this side. If there was one, please raise it then when we know to follow up with you.
My name is Edson. am from Zimri. It's a Zimbabwe property development company. We have a number of standalone big shops, not shopping centers, and composite buildings with shopping on the ground floors. I think I had a number of discussions with a good number of colleagues last night. The question I got was, when is Mugabe dropping dead? You know, I think that's, we're underplaying the triangular effect of politics, one, and also in terms of policy consistency. I remember, I think it's one of the retailers, Mr. Price, struggling with the indigenization laws. So you have politics on one side, you have policy in terms of monetary. We don't know whether there's a dollar versus a dollar real and a dollar in bond, whether that makes sense, we don't know. I think those are some of the issues that people are struggling with. For me, it's not even the opportunity. It's the policy, it's the politics, it's the currency. The other things, I think they would fall into place. If you look at night ring numbers across Africa, we're competitive in terms of retail, in terms of a rate per square meter. If you look at what Brett was saying, they built a shopping center close to a shopping center, and that shopping center is full. The two shopping centers are full. So effectively, what is happening at the moment is the three issues, where you have your politics, we don't know, it's not predictable. We also have your policy, especially the indigenization policy component. We are supposed to comply with a 51% local content. We don't know from where, and people are not comfortable with it, and I wouldn't be. Then you have a currency where there's an introduction of a fiat currency, which is at par with the dollar, but on the ground it's not trading at the same. So really, for me, it's not the opportunity, it's these hygienic issues that need to be dealt with on a bigger scope than the opportunity for retail.
Perfect. Thank you so much, sir. Yeah, tough questions and a very realistic outlook, and again, addressing some of the key issues. I think the question he initially asked is going to be a tough one for you to address, Chipo, but if we can basically try to understand how do we manage and navigate through this tough environment in Zimbabwe for us to unpack opportunities. Thereafter, we'll start with closing comments from our panel.
Well, I think he has summarized it in a nutshell. With the Zimbabwe platform, we're really looking at the simple issue of politics, which I'm not here to answer on, hopefully.
So you don't know the date?
No. But otherwise, if we can resolve the policies issue, and I think there's a drive towards that. There's an understanding that the existing policies are a constraint or a deterrent in the process. So there are efforts to also address that in the process. If that can be resolved and the political stance, I'd like to think we're geared to take off. We also have, we believe in Zimbabwe. We are seeing a future in Zimbabwe across the challenges. We think there's potential ahead of everything. So I think we'll not get bogged down with it. Let's call them small, but those are the big things at the moment, the policies and the politics. Once that equation is resolved, we think we're ready to go.
Fantastic. As we start making our way down the panel, some closing comments. And Joe, this is most likely going to be a quote you'll look back on in the next 5 years. So make sure you make the right call this time. But for someone and for wrapping up these Sadc investment opportunity, particularly in the retail space, what are some of the considerations we need to bear in mind that will ensure sustainability in the investments we make in the next 5 years? And are there other opportunities within Sadc that we might be missing out on?
Yeah, there are unquestionably going to be opportunities that are going to unfold over the course of the years to come. Where we see great opportunity at the moment, as I've, not to be a broken record, but is in these convenience centres in markets where either in the big urban areas or the rapidly expanding towns, the demographics are there behind it. The urbanisation rates are supporting the need to have shopping centres in towns in Zambia of a couple of 100,000 people with no proper formal retail. So we believe there'll be opportunities there. There will still be further opportunities in Botswana. We'll probably have to be more inventive in order to find them. A project that we're working on at the moment is to deliver more of a retail warehouse kind of design quarter type product, which doesn't exist. It's going to have to be looking for those kind of angles. So there will be opportunities out there. We're going to have to be more creative, and we'll have to do our research and make sure we deliver the right products for the markets that we're supplying.
Heidi, your closing remarks?
I think Joe pretty much summed up. I think there's always opportunity, and I think the opportunity comes in areas where we bring retail to a catchment market who has not had the opportunity of formalized retail. I think informal retail will always be there, but I think certainly providing retail and bringing services and products to people who have not had the opportunity and don't necessarily have the luxury to travel long distance, I think it's something that we will continue doing, again, on a community level. Shopping centers that are neighborhood centers, community centers, those are more sustainable. In tough times, people need to eat, they need to clothe themselves. And again, I think that particular product is our retail investment mandate, and we will continue to look for opportunities of that nature. But at the same time, we will start engaging more with a number of the large global retail brands that actually fit that particular price point and product offering to bring something fresh, something new. You heard the previous panel talk about something fresh, something new. So we want to be able to try and fill that aspirational middle market hunger while still being a convenience support to the African retail landscape.
Fantastic. Louis, let's wrap it up with you.
Thanks, Kiki. I think just to sort of go back to your question that you asked, who are going to be the winners in these markets, it's almost certainly going to be those that invest based on property fundamentals rather than on paper. And I think particularly in Zambia, paper can be quite seductive, whereas the reality on the ground is going to be more difficult. And given that, and particularly Zimbabwe's particular set of circumstances at the moment, look, I'm born and bred there, but Botswana is looking pretty rosy.
Well, we'll leave it on that note. Thank you so much to each of my panelists for joining us in conversation. Again, these themes and conversations will also take place, ladies and gentlemen, in the networking opportunities that are provided. But a big thank you and a round of applause to my panelists. Thank you. As we do make our way off stage, again, conversations regarding the Retail Innovation Summit do continue. For our next panel, ladies and gentlemen, it is focused on expansion, retreat or entry. Where is the next market for Africa's retailers? So if you will be joining us for that conversation, please do stay seated. However, if you're joining a conversation on designing for density, which is taking place in the next room, please feel free to leave the room before I introduce our next panel. Thank you so much.